want to go lower strategy with the new loan level pricing adjustments that have hit last week. Say that you're a buyer, you're trying to find a way to afford more. Here's some different ideas. The first one is if you find a balance sheet lender, someone like a federally chartered credit union, I know one, you can always reach out to me and ask me for that information. But they have a 10-1 arm. There's no loan level price adjustment. So what that means for you, the rate's fixed for 10 years. You don't have the additional discount points that you may be subject to with the other conventional type financing with FHA and VA are not subject to the loan level price adjustment. So that's another route. But obviously you have to be a veteran to get a VA loan. And FHA, the loan limit, I believe, is 531 and most of Dallas Fort Worth. So that equates to a purchase price of a little higher than that, about 550, give or take. Rough numbers. I haven't run the numbers. Another idea, say here's a way that you can say that you can qualify for 12% more than the prevailing 30-year rate. I don't talk about rates, so I'm not a licensed loan officer, but say that you can get a 1% permanent rate reduction. Let's just, for instance, say the rate's 7. If you can pay the points to buy down the rate to 6, you can afford 12% more, basically, in a new mortgage. Now, that takes about 4 points. I talked to one of my lenders today. It's about 1% for every quarter point in permanent reduction. So you could approach the seller and say, hey, I'm going to pay 2 points to buy down. I would like to ask you to pay 2% to buy this down. That way, that's one way you can get in there permanently. Or you can do a 2-1 buy down. That costs about 2%. You can ask them to help you with that. Now, here's what you need to know, too, about these different rate scenarios. The 2-1 buy down or 3-2-1 buy down, you're going to qualify at whatever the fully indexed rate is on those. And what I mean, say that the rate is 7% when you buy the home. And you did a 2-1 buy down. So the first year, your rate's at 5. The second year, say that you did, a two-year buy down. The first year, you're at 5. The next year at 6. Year 3, you're at 7. You're qualified at that 7% rate. If you get the permanent rate reduction, obviously you're qualified, say that's 6%. Because you paid a point. You got your rate down permanently by a point. Then you're qualified at that rate. If you get the 10-1 arm, you're qualified at whatever that 10-year period is that the rate's at. Say it's a 1.5 less than prevailing mortgage rates. I'm not sure about numbers. I'm just throwing numbers out for comparison's sake. And of course, there you have a 10-year fixed period. Where rate's going to go in the next 2 years? Are they going to continue to rise for 10 years continuously? Probably not. They'll probably come back down. So that's an option. Or say that you just don't want to deal with the buy down or any of that. I know of a lender that has a 3-year guarantee for you to refi at no cost. Happy to give you that information too if you want to reach out to me. That's another option. Just wanted to put these things out there with the new rate environment that we're in as a buyer. As a seller, you may want to think about offering that too. On the rate buy down, some want to, some don't. If you have any questions, feel free to reach out to me. See you next time.